Hello everyone, my name is Givmo Maguju, and today I just want to look at the balance sheet, right? And previously we looked at the income statement, we looked at the cash flow statement. So just a quick recap, we said that the income statement is used to measure the profitability of a company, right? So it is that statement that if you want to assess whether a company is making a profit or a loss, you look at the income statement. And we also looked at the cash flow statement. The cash flow statement, it helps you to assess the cash flow, right? It helps you to see where the business is spending money on and how the business is funding the purchase of equipment and how the business is getting its money, things like that. So today we want to look at the balance sheet, right? So the balance sheet, it records the assets and liabilities of a business, right? And so as you can see, there are quite a number of sections that you can find on a balance sheet. We have got the non-current assets section where we list the fixed assets of a business. For example, in our case, we've got the property, plant and equipment, and we also have got current assets. And under current assets, we've got cash and cash equivalents. We have got accounts receivables. These are debtors. These are customers who buy goods and services from us on credit or on account. We have got inventory, right? So this is the inventory that we buy for resale. And we've got prepaid expenses. These are expenses we have already paid for, but we haven't actually used the services that we paid for, things like that. And down here we have got non-current liabilities. These are things like long-term debt. These are long-term financial obligations. So the business has got an obligation to pay back long-term debt, right? And we have got current liabilities, and under current liabilities we've got accounts payables. So we generate accounts payables, or the business can list accounts payables when the business buys stuff or inventory from suppliers on account or on credit. So if you see this accounts payables line item, you have to bear in mind that the business has bought stuff on credit. And then we've got accrued expenses here. These are expenses the business hasn't yet paid. And we've got accrued income taxes. These are taxes that are owing. We have got deferred income taxes here, right? So this is a typical balance sheet. We've got shareholders' equity. This is where you can see the equity capital that has been contributed by the owners of the business. You can see the retained earnings there as well, right? So now let's get to total these amounts here, and let's see if our balance sheet is going to balance. Okay, so but before we do that, I just want to show you that there is a formula. If you have taken an accounting course or an accounting subject at high school or at college, I believe that you are familiar with this formula. The formula is like this. It says capital is equal to assets minus liabilities. Okay, that's the general formula of a balance sheet. So if you want your balance sheet to balance, it means your capital, it is to equal assets minus liabilities. There's also another advanced formula that most companies use, which is here we say shareholders equity and total liabilities equals to total assets. Right. So in other words, what we are trying to say here is we can say total assets equals to total liabilities plus shareholders equity. Right, 100%. So I think this is making sense to you, right? So basically we started from this was the formula. It is still common among accountants and financial analysts, but most balance sheet today they use this formula here. So let's just see if our balance sheet is going to balance. So what we need to do is to total all current assets. So current assets, these are assets that can be turned into cash, right? Or yeah, basically that's it. And we have got current liabilities. These are short-term financial obligations that fall due within 12 months, within a year. Okay, right. So let's just do that here. So we can say, let's sum up that, and let's just add that to property, plant and equipment, and let's just do the same on total current liabilities. Right, let's do the same so that we get total liabilities. Right, so let's just get our balance sheet to balance. So we can say total liabilities plus total equity, so that and you can see that total assets is equal to total equity and liabilities. So our balance sheet is balancing. Right, so let's now project our balance sheet, because right now we have got the historical figures for 2021 on our balance sheet. So we need to get figures for 2022. So here it's more like we are projecting our balance sheet in 2022, right? So let's begin to project our balance sheet. So in order to project our balance sheet, we are going to use the cash flow statement, right? So that's the statement that we are going to use to project our balance sheet. So in other words, what we are doing is we are tracking how we are preparing our balance sheet based on the cash flows, right? So let's just do that. So we look at the property, plant and equipment, and we think of the cash flow statement items that can affect this balance sheet item. Okay, so if we go back to the cash flow statement, we'll see that depreciation affects property, plant and equipment. And here we've got capex, we purchase some property, so this is addition. We've got a sale of property, plant and equipment, and this also affects our property, plant and equipment figure in the balance sheet. So as you can see, depreciation will reduce the property, plant and equipment figure in the balance sheet. Then additions here will increase that figure, and here the disposal of property, plant and equipment will reduce that property, plant and equipment figure in the balance sheet. So let's just do that. Right, so what we're going to do right now, we're going to say property, plant and equipment minus depreciation in the cash flow statement minus additions. Mind you, a minus and a minus will produce a plus, okay, and then minus the disposal here. Perfect. And then we come here on cash, so we say 10,000 plus, then we add the cash and cash changes in cash and cash equivalent. So this item affects our cash and cash equivalents balance. Then accounts receivables, then we say minus changes here in accounts receivables, and then we do the same for inventory, minus changes in inventory, and we do the same for prepaid expenses, minus this. So we copy this formula to the right by pressing Ctrl plus R, and then we do the same here, just like that. Then if you go back to the cash flow statement under financing activities, you will see that the company raised new debt and it also repaid a portion of the debt. So we have to capture these changes. So let's go back here. So we're going to say 20 long-term debt plus the new debt that was issued here, and then plus the repayment. Obviously take note of the sign like that, and then let's go to accounts payables. So we're gonna say plus, and it's gonna add this figure there. It's gonna add that accounts payables and plus accrued expenses and accrued expenses, and we do the same here, plus accrued income expenses, and then we go and look at the item that affect deferred income taxes on the cash flow statement, of which is there, this line item there. So we have to total okay, we have to copy this formula to the right, and we copy this to the right as well, right? So there is also new equity that was issued. So we go back to the cash flow statement under financing activities, we do that, great. And then retained earnings, net income in the cash flow statement affect retained earnings, and retained earnings is also affected by dividends that were paid, and is also affected by share repurchase. So we have to capture that. So we're going to say plus. First of all, we add the net income there, plus, and we come back here, plus, and then we come back here, plus, and then we just add that once more, just like that. And then we copy the formula to the right, and then we copy this to the right as well. And as you can see, our balance sheet is balancing in both years, 2021 and 2022. So you can see 115,750 and then 115,750. Right, so this is fantastic, guys. Let's just format this a little bit. So we just want to remove these grid lines. So to do that, we're gonna press on our keyboard Alt W and then press VG, and that way we remove the grid lines. Perfect. And let's just add a border here. So we're gonna say Alt HB and then choose U, a double one there. And let's do the same here. I'm gonna say Alt HB and then press U there, and this is great. And let's just put a border as well here, Alt HB and then P, and let's do the same here, Alt HBP. I think we have to do the same. Perfect. So I think It looks great now, and yeah, which is fantastic. So what I would do is I'll just delete that row there. So Alt HD, then to delete the row, you press R there, and then I'll do the same here. Alt HD, then R. Right. What else? What else needs to be formatted there? Okay, 100%. So yeah, basically that's it. See, now we've got a nice, clean, and great looking balance sheet. So I hope, guys, you found this useful. Thank you so much for watching.